And specifically, this really points to Switzerland. Gold futures in New York this morning surging to a record high after sources telling us at Bloomberg that Swiss gold bars are unexpectedly facing U.S. tariffs.
Imagine gold, once the world's most reliable safe haven asset, being weaponized. A surprise U.S. gold tariff rattles Europe, rocks markets, and forces Canada into swift, bold countermeasures. What just happened? In early August 2025, President Donald Trump stunned global markets by introducing a surprise tariff on gold imports. Known for its traditional role as a hedge, gold suddenly became a focal point of economic drama. This unexpected move ignited shockwaves across the European Union and triggered bold responses from Canada, all in a high-stakes effort to preserve trade leverage. This unfolded in early August 2025, with reports emerging around August 5 to 7 as markets and policymakers reacted swiftly. The drama spanned Washington, D.C., where the tariff directive originated, global financial centers, particularly in the EU where markets reeled, and of course Ottawa, where Canada's government mobilized its strategic trade response.
Gold's a different animal. It's much more armed in, and it's much more money, and it's really traded. So I don't know if it can get much more than 2%, but for me, it's just part of the bottom line of gold. It's a pretty significant bull market, and the key thing to remember about gold is the gold market absolutely loves.
It began when Trump announced an abrupt tariff on gold, an asset often seen as immune to such political targeting. Gold prices jumped in response. At the same time, the EU expressed stunned surprise at what was seen as a highly unconventional move. Markets responded with volatility. Meanwhile, Canada sprang into action. Prime Minister Mark Carney and his cabinet convened emergency meetings. They moved to shore up domestic sectors, especially softwood lumber, with a $1.2 billion support package to cushion against potential U.S. retaliation. Simultaneously, they accelerated efforts to diversify Canadian exports. Gold exports to the UK alone surged by 473% year-on-year up to May. Tariffs on gold aren't just economic, they're symbolic. They signal a willingness to weaponize even the most traditional safe haven. For Trump, this may have served dual purposes: economic pressure and political theater. Canada's swift reaction reflects deep structural concerns. Long reliant on the U.S., at 1.78% of exports, Canada has seen that share fall to 68% by May 2025 due to rising tariffs on steel, autos, and more. The gold export spike to the UK and EU reflects deliberate diversification, though experts warn Canada can't fully decouple from its southern neighbor. Markets flinched, gold spiked, European traders reeled at the novelty of a bullion tariff. EU officials voiced alarm. This was beyond conventional trade skirmish lines. In Canada, the combination of direct financial support and export strategy sent an assertive message: we'll protect our industries and leverage even as U.S. trade tactics escalate.
The idea is that a lot of traders here in the U.S. thought that these tariffs on Swiss goods wouldn't be applied to gold because you need to trade 400-ounce bars for central banks, 100-ounce bars for the COMEX, and kilo bars in Asia. Apparently, there are going to be tariffs on those.
Did you know gold had already been forecast by Goldman Sachs to hit $3,000 an ounce in 2026 amid rising tariffs? Canada's gold export to the UK jumped 473% in value and 312% in volume in just 1 year. Despite exemptions and pause measures earlier in the trade war, like a 6-month suspension of key tariffs, Canada continues to brace for escalation. As of early August 2025, TSX futures were recovering, up 0.6 to 1.6% in recent days, driven by strong corporate earnings and cautious optimism even amid lingering tariff fears. Looking forward, Canada's diversification efforts may accelerate, but full decoupling remains unlikely. Global markets will watch whether Trump doubles down or if Canada and the EU push back through trade alliances and diplomatic pressure. The gold tariff saga reveals how fragile global norms can be and how swiftly a single move can reshape trade relations. Canada's agile response shows both resilience and the limits of integration. What should we all take away? Even symbols like gold aren't off limits in modern geopolitics. How will Canada continue to protect its leverage? And how far will such tariff brinkmanship go? If this story had your attention, hit subscribe. Drop your thoughts in the comments especially. Could countries shouldering such integration really decouple when trade gets heated? What's next in this unexpected gold gambit?